Ladies and gentlemen, the US dollar has depreciated significantly against the Singapore dollar and also the ringgit, causing a lot of stress on investors who have touched US denominated asset. So will this go on? Will this turn into a mega crisis? How long will it take before we see recovery? Today, I'll attempt to answer some of these questions. Please watch till the end. Let's go. So many people has been writing to me and said, wow, US dollar is in such a serious depreciation crisis. And they also think that the worst is yet to come and would like me to address this issue and see how bad it will take. So let's watch on, shall we? So right now, the US dollar is weakening very sharply in this recent 1 or 2 days. And I would say that this is a policy-driven crisis and not a crisis that's driven by recession or any externalities. And funny thing is that this is actually nothing to do with US. So it's really driven by a lot of currency movement globally. And once I explain to you, you will understand. So right now, the US dollar hovering around 1.26 to 1.27, and it was 11 years ago in around 2014 when we last hit this kind of number, because after that it was just pretty strong numbers throughout. So this is quite a serious number. Now, just to put things into perspective, let me show you the chart. So this is the US dollar versus the Singapore dollar. Now, many years ago, it was at a high of 1.6, 1.7, and it came down quite a lot. So somewhere around 2011, 2012, it hit a low of 1.21. I happened to be in US for my MBA then. And those days, I was just lucky. I got to buy things in a cheap, and I spent a lot of wonderful time holidaying and enjoying my life in US while studying. And it was really at the lowest, 1.21, 1.22. And ever since then, it has been appreciating pretty strongly and recently came down again to now 1.26, 1.27 versus the Singapore dollar. So are we at the worst already, or the worst is yet to come? Well, this is not the worst. The worst was 1.21. Could it go further? Let's analyze why this thing even happened. Well, surprisingly, this whole problem didn't start with US. It started with Japan. So this is fundamentally a US yen stability crisis. So very funny that the Japanese yen having a problem is now causing the US dollar having a problem. And as a result, it affects many investment. So why is this matter? Because I'll describe what is happening in Japan in a nutshell that spill over to the Japanese environment, and then finally the Japanese yen, and then the US dollar. So the Japanese yen has a phenomenal depreciation, okay, over the last 5 years. So we was about this level, and it's gone down by almost half, almost half, one third or one third to more than one third to almost half. So the yen has gone down significantly. Many Singaporeans are enjoying holidays in Japan, Hokkaido, and Tokyo, and so on. And things are getting much more cheaper and wonderful. And that's the result of a very severe depreciation of the Japanese yen. Now, why has the Japanese yen depreciated so much? Well, it is a structural problem with the country. So there is a massive interest rate gap between the US and the Japanese interest rate. So the US has kept interest rate nearly zero, okay, while the US has been raising interest rates severely. And this facilitates what we call a carry trade, where people borrow yen and then they send it over in what we call hot money to put into US Treasuries and anything that's safe. So they make a difference. It's almost risk-free. So they did that, and they pull a lot of capital from the yen. In the process, they will have to sell the yen and buy the US dollar. And there's also a lot of printing of money in the Japanese central bank side. And task, this add on together really in driving the yen down. Now, the Japanese economy has not been doing well. They have been in recession for 30 years. 30 years. Only recently they came back. And that's largely because they have a very severe property bubble burst that, by the way, resembles what is seen in China right now, except China is still having some decent economic growth, about 4 to 5% growth, but the Japanese economy totally collapsed off the cliff. And not to forget, right now, they have a severe aging population. They have not enough immigrants to come in. And the Japanese population is very exclusive because of language and culture. They do not like the non-Japanese to come in big numbers. As a result, they have low productivity. The whole country just go down. And therefore, it is become policy. They accepted this kind of norm for the Japanese yen. So the Japanese Monetary Authority tried to intervene. So they spent about US $100 billion defending the yen to try to prop up the value of the yen, at least to slow down the decline. So the yen is the problem, okay? Why is the yen a problem? Spill over to a US dollar. Well, guess what? When the yen collapse, this will trigger a lot of financial institution. They are holding on to US Treasury in Japan. Japan is one of the countries that hold the largest pool of US Treasuries. So in order to prop up the Japanese yen, they will sell the US Treasury, and as a result, sell the US dollar and buy back the yen. So when the treasuries get sold down, the price of treasury goes down, which is the US bonds, and as a result, the yield goes up. The yield is a measure of the US long-term borrowing cost, and the government of US borrows a lot of money because they run a lot of budget deficit. As a result, the borrowing cost goes up. So the US Treasury doesn't want long-term borrowing costs to go up in a big way. So therefore, they don't like this yen instability. So it's very clear right now that the yen collapse causes the US bonds to be sold in big number. As a result, US dollar being bought. Why is the decline of the Japanese yen a US problem? That's largely because when the yen collapsed, there is a bond issue. So when the yen collapsed, the holders of US Treasury in Japan will sell the US Treasury in order to prop up the yen. So when they sell the US Treasury, the value of US Treasury goes down and the borrowing cost, which is the yield of the US Treasury, goes up. And then that will affect US Treasury. The US Treasury yield measures the long-term borrowing cost of the US government. Given that the US government runs such a severe budget deficit, guess what? They have to control this problem. If not, their borrowing costs keep going up. So really, this yen instability caused spillover risk to US debt market. That is why the US government have to intervene. So what happened today was that there was a New York Federal Reserve rate check. Okay, what on earth is a rate check? Well, rate check is basically the Federal Reserve in New York, actually contacting major foreign exchange dealers to assess the market situation. So they're basically asking, hey, what do you think the US dollar to Japanese yen is heading? What's the situation right now, and so on. So this rate check basically caused a lot of signaling, and as a result, they think that there's a high chance that the US Federal Reserve will intervene and not to let the US dollar appreciate too much against the yen. So while this is not an announced policy and not a confirmed intervention, but this is usually in history a precursor. So the Federal Reserve will generally do a rate check first before intervening, and therefore, as a speculative and the most speculative market, which is the foreign exchange, the speculators right now predict that, the Federal Reserve is going to do something. Therefore, that's why they now sell down the yen. So the Federal Reserve in New York is now doing a rate check. It is the rate check that is causing the yen to go up versus the US dollar. So the Federal Reserve actually contacts several major foreign exchange dealers to assess the market condition and see what's their prediction of where the US dollar and the Japanese yen moving and things like that. While this is not a confirmation that the Federal Reserve will intervene, but usually it's a signal that they are likely to do it. Okay, likely, a precursor. So as a result, the foreign exchange market react ahead of it, causing the US dollar to go down. So that is why all these are happening. What's the likelihood of the US intervention to sell the US dollar to buy yen? Well, after I read all the reports and things like that, likelihood 50-50, hard to say. Okay. So it is a sure thing that right now the US government doesn't like the US Treasury to be sell off. So therefore, there's a chance to intervene. But however, historically, the US Federal Reserve only intervened 3 times since 1996. So this is a low likelihood, not no, but low likelihood. So as a result of what's happening between the US dollar and the Japanese yen, the Sing dollar appreciated against the US dollar. So the US dollar now is being sell off because they're anticipating that the Federal Reserve will intervene to sell the US dollar to prop up the yen. As a result, because the Sing dollar is now weighted against a basket of currency, so the Sing dollar also rose as a result and appreciated against the US dollar. So in some sense, we are lifted up because of what's happening among giants. I would say that this is a one-off event. Okay, it's a one-off event that the US government is intervening or at least signaling that they are going to intervene. So I wouldn't think of this as a trend unless the yen continue to depreciate in a very significant way. Then the US government have no choice but to intervene non-stop. And that will lead to a spiraling of US dollar downwards, and that's not a healthy thing. And not to forget, US dollar depreciating will also cause inflation in US. So they also don't like that. So I don't think this will be the main cause of continual depreciation of the US dollar. Now, when will this not be a one-off? That means it will continue to depreciate non-stop. Well, it can happen if the Federal Reserve continuously, aggressively cut the interest rate. Okay, then hot money will flow out of US because the interest rates are getting lower. And if there is a sustained loss of confidence towards the US Treasury, yes, I think that will cause the US dollar to continue to depreciate. The geopolitical issue right now that's happening across the world caused by US, and if people continue to lose confidence, then that will cause the US dollar to go down. And right now, there's this fear of de-dollarization, that people are afraid of holding the US dollar because the US dollar is being weaponized in a big way as they deal with many geopolitical issues. So if all these things happen, which it could, because Donald Trump is, unpredictable, then the US dollar will continue to go down. So in a nutshell, I do think in the long run, the US dollar will continue to depreciate, but I don't think it will be a massive sell-off, okay? But I think small declines are expected. This kind of currency risk is an inevitable risk of global investing. We cannot avoid it, but if we don't touch global diversified index and global diversified portfolio, it's also very risky to just concentrate on the one country, which is just Singapore. So it will be a wrong reaction to just panic sell, okay, and overreact. So I think the right way is just diversification, so that we can spread out all the risk. So how do you diversify? I've told everybody countless times, your CPF is your firm foundation, financial safety net. It is in times like this, you need a strong foundation in your CPF. Your CPF is Singapore dollar denominated. It will protect you against retirement risk and longevity risk. Is government backed, very good interest. Maybe not enough for some of you, but 4% to 5% interest is very high, and we reach 55 years old, you can even get 6% for part of your portfolio. And it doesn't have any this kind of foreign exchange risk. So my suggestion to everybody since 10 years ago is when you're below 55 years old, try to push yourself towards a full retirement sum. And if you're above 55 years old, push towards an enhanced retirement sum. There's a lot of jokers out there in the YouTube telling people not to head towards your full retirement sum. I'll just say this, the full retirement sum and the enhanced retirement sum above 55 years old is a firm foundation. Let me say again, firm foundation towards a secure and safe retirement. Nothing, no stocks, no US currency, no US equities, no Singapore stocks can beat this kind of firm foundation. So let me advise everybody, now this is a must work towards. I've always described a Kueh Lapis investment structure. Always set your CPF as a financial safety net, and then stack up your stocks on above, and then any other speculative or higher risk asset you want to touch, you touch on top, right? The sequence is important. And once you have this sequence right, you do very well in life. So in conclusion, this kind of fluctuation and movements are all expected. And I don't think we need to overreact. And always remember, the firm foundation is always on your CPF. Put that as a powerful safety net, and you'll do very well in life. And stay focused and head towards a very powerful financial freedom this way. So this set of slides, I will put it into my Telegram group. Okay, this is the QR code that you can scan. Remember to add to subscribe to the channel, and I'll make all my slides available in a PDF format in the 1865 Telegram group. I'll see you guys tonight in a live stream. Bye-bye.